Quite the change here. Let's get back to this anniversary of Lehman Brothers and the collapse that followed. What lessons remain for individual investors?
And how might that affect your own portfolio? Let's ask Tom Lydon. He is ETF Trends editor and president of Global Trends Investment, and Scott Richter. He is co-director of large cap value strategies at Fifth Third Asset Management. Good to see you both. Tom, I want to go to you first. We heard the president today commenting on what might change, sort of lacking in very clear specifics about how that might change the world of individual investors. Do you think it will? And if so, how do we invest defensively because of that?
Well, absolutely, David. I'm here in San Diego at the Charles Schwab Institutional Conference with 1,200 financial advisors. Last year at this time, it was very glum. You could see tumbleweeds blowing through the exhibit hall. But today, they're very optimistic. The tides have turned, the wind has shifted, and yes, you know, the president is, I guess, a little bit optimistic, but for the average investor who's seen this huge run-up off the bottom, there's some optimism going forward, and I think with inventory numbers low, with lower unemployment numbers, and with earnings coming out in just 3 short weeks, there's an opportunity, I think, to go into 2010 with the higher stock market prices.
Scott Richter, a lot of people are listening to you guys and remembering 1 year ago what their portfolios were worth, and many people don't have that same value today. Is there a way to turn it around just by using common sense and a few smart strategies?
Well, good afternoon, Liz. Good afternoon, David. I think so. I think investors need to do their own work, do their own homework, if you will, not be persuaded by their advisors to just follow blindly. I think that's a good lesson. I think another lesson would be obviously not to panic, to look for opportunities when they present themselves, like in March or April. Looking at the data. I agree with Tom. I think the worst is over for the economy globally. I think we are moving forward. We're moving forward with momentum, as Tom pointed out, an inventory build. We have positive economic numbers globally, and I think we're on the doorstep of profits, and if we can actually get some profits in moving revenue forward, we can actually see CEOs who are starting to buzz now make some employment decisions to hire and to spend some capital dollars. So I think that this could be a positive reinforcing circle as opposed to the negative one that we've been in for the past year.
Well, that would be great for employment. Let's hope you're right. But Tom, I got to ask you, despite your bullishness, your picks, your stock picks right now are pretty, I don't know if bearish is the right word, but defensive, let's say. Oil and gold. Why?
Well, oil and gold aren't always defensive. I mean, we're in a situation, obviously, David, with the lower dollar, a threat of inflation, and with all the ETFs available now where the average investor has access to an asset class that they didn't have before. Many are talking about the price of oil, the price of gas, the price of gold. But here are some companies within these ETFs, these exploration ETFs and service ETFs, that are, these companies are really profitable and doing very well with these prices at these levels.
You like this one? It's the Spider Oil and Gas, and then the iShares Oil and Exploration.
And the iShares Exploration, correct.
And let me get to Scott here. You like two names, Transocean and Stryker, two totally different businesses. Transocean, of course, a driller. Stryker is medical equipment. What about these two names do you like the most?
Well, Liz, they're both selling at a discount to the market, and we're a value shop, so we see them as undervalued with catalysts. So in RIG's case, in Transocean's case, international development, higher crude prices, and imbalance in supply and demand, and they're right in the sweet spot with good customers, good pricing. And then in Stryker's case, because of Obama's health care reform efforts, there are a lot of people that have put off procedures. These guys do knees, hips, and some other things, and we think there's going to be a recovery in those procedures as the economy recovers. They've also got some great margin improvement programs down the road as well.
All right, and BP is going to need some deep wells to get that oil out of what they found in the Gulf of Mexico. Guys, thank you very much. Scott Richter, Tom Lydon, good to see you both.
Thank you.
Thanks.